The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that music means it's time once again for the Option Block, your bi-weekly source of options, wit, and wisdom, and occasional belated Seinfeld references. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And I am joined today on the old Option Block all-star panel by our usual cast of characters for a Thursday episode. Maybe we'll call them the Thursday crew from now on. Starting off with the man from the mountains, a.k.a. St. Charles, Illinois. The man, the myth, the legend, one Uncle Mike Tusaw from Know Your Options, Inc. Uncle Mike, welcome back to the show, sir.
Thank you for having me. It's always a privilege to be here.
You sound so enthused, sir.
There we go.
That's why I look forward to the Thursday shows every week, because you're my weekly dose of sunshine and puppy dogs and lollipops and enthusiasm.
Okay.
Otherwise, the rest of my week is just mired in darkness and depression and grim austerity. So you're
glad I can help you out.
You're
Wow.
the counterpoint to that, sir. All right. And next up on the old all-star panel, we have the man holding down the Options Express hot seat, none other than Big Tim Navabi, a.k.a. Mr. Beret. Mr. Navabi, welcome back to the show, sir.
Hi, Mark. How are you?
Are you wearing the beret as we speak?
I had to take it off because I was actually doing the windmill air guitar for the intro, and then I got the drum beat going, so I'm actually a little out of breath. But I want to say, I missed you last week.
Yeah, you guys had a fun little rollicking show while I was gone. When the cat's away, the mice shall play, apparently.
Right. And I spent a lot of time, I think it was last week or the week before, listening to just a lot of your shows because it's now on Stitcher. And
yes, we are everywhere.
Android, so that's kind of how I listen to my shows. And you work very hard. I got to say that. I mean, a lot of good shows. I was just going to say a lot of conversation. I mean, it's just I really appreciate it. A lot of very good information. I really enjoyed all the shows.
Well, thank you for that, sir. I mean, we do put out quite a bit of content, and wait till you see the extravaganza we have in store for you from the Options Industry Conference. There's a wealth of content coming your way. We have all of the panel audio that is exclusive to the Options Insider. That will be coming up relatively soon, as well as all the speakers, as well as my own little forays. They lock me away in a recording studio for 3 days at this conference, and one by one, everyone makes their way to our room, and so I get to have one-on-ones with a lot of interesting people from the world of options. Those will also be going up, as well as some episodes of the Advisors Option that we recorded live down there in New Orleans, as well as a media roundtable that I ran with a bunch of various print media who cover the option space from Bloomberg and other outlets. And it was an interesting conversation to have on the exact nature of options coverage in the financial media and how these products are covered or oftentimes miscovered by a wide variety of outlets and some of the reasons that might be lurking underneath that. So a lot of interesting stuff coming your way in the near future. We have to just sort out the schedule over there at theoptionsinsider.com, and then we'll let you know when this stuff is coming out. But a ton of great content from OIC heading your way. And I just came back from the CME this morning. We did our long and short of futures options show there. So yeah, we are quite busy from a radio perspective, but it's all good stuff. A lot of good shows coming on the network right now and in the weeks and months to come. So if you like options radio, we've got you covered.
Also, I don't want to give away any names here, but somebody that I met last week was talking to me and said, "Oh, do you know who this person is in the industry? He's in Chicago and trading." And I said, "No, I don't." So, I started to do some research just on the web, of course, start with Google. And sure enough, there you are interviewing him. And I thought, wow, this is perfect. I got all the information I needed just by you just by the interview. It was great.
Chances are, if you haven't met them, they've come by our studio or in some way, shape, or form, and I've had a chance to chat with them. So that is one of the fun perks of this job, is you meet quite a few people. It's funny, actually. I was down at OIC and a bunch of different events. Whenever people walk past me a lot at these industry events quite often, I can see their ears perking up, and they don't know me by sight, but they all come up to me afterward and say, "Your voice sounds familiar. Do you do a radio thing?" And so we get a lot of that down at these shows. It's kind of funny. People tend to recognize the voice, if not the face. All right, and last but certainly not least, speaking of faces, we are joined by the man from Maine, a.k.a. the Lobster himself, a.k.a. Andrew Giovannazi of OptionPit.com. Mr. Giovannazi, welcome to the program to you as well, sir.
Thank you for having me. I forgot about my face on Skype now. I got to put my fishing picture back up.
No, that's great. It's a very pensive picture. It's like you're doing your own little Rodin there.
Yes,
deeply in thought.
I don't quite know how to add on the Skype cam. I'm sort of to the right or the left or what have you. I am here, and I am and I am in Maine.
There we go. Confirmation on both points from Andrew. I know our listeners were very concerned. All right. With the team assembled, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is the portion of the show where we discuss what's been trading, what's been moving the old markets today, and it was essentially a mixed day on the street. S&P up about 0.3% to 1358. The Dow up about a commensurate rate to close at 12,855. The NASDAQ down a wee bit. And by we, I mean literally we, one handle to 29.33. For the high-flying NASDAQ, that's a pretty slow day. And, of course, the good old VIX cash settling to the downside, down about 6% to 18.83. Otherwise, not a lot of action lighting up the old tape from most of the major names we talk about here on the show. Apple pretty much unched on the day. That's one of the few times we could say that. So, Uncle Mike, I'm sure you had a relatively quiet day from a BBI perspective today.
Yeah, somewhat. I'm still using a back spread on it to hedge at this point, and but sold some premium in the morning, sold a covered call in the morning, and bought it back in the afternoon for a little profit. It's just one of those things that you got to do what you got to do when you're dealing with something like Apple right now.
And speaking of Uncle Mike, I'm sorry to have to do this to you, sir, but of course we have to discuss the major mover on the day, good old Cisco. I know that one still brings a tear to the old eye for you. But
I'm over it. I'm a forgiving person.
Cisco disappointing the street rather handily yesterday, selling off today about 10%, closing down about two handles, or 16.81 to 16.81, excuse me. And they were far and away the leading individual equity option name. So we'll get into a little bit later on in the old odd block exactly what was lighting up the tape in good old Cisco. I know Mr. Tinov, my little birdies are telling me that you were quite busy on the horn today with Priceline.
Yeah, that is true. Priceline definitely kept us busy today. with the earnings yesterday.
Did you have Mr. Shatner calling in to try to roll his puts?
I wish. I really wish. No, not at all. That would be a lot of fun.
That would be a banner day at OX when the Shat calls up to roll his downside puts. That'd be fantastic if he was that savvy as well.
Yes.
Son, I would like to roll. I don't like this 675 strike anymore. Why don't you roll me down to the 650s?
I'm trying to think of some quick Star Trek quotes that I would be able to use on the phone with him, as I was placing in his orders.
Have him you up right now.
I need more juice, Scotty. I need more juice.
Dang it, Jim, I'm a trader, not a miracle worker.
Yeah, that's.
Come on, man.
I was trying to head in that direction.
Come on, man.
There you go. We've given you some ammo. We've given you some ammo for the inevitable day when Shatner does ring you up, Tim, and you are prepared for that moment. But what was
50,000 put roll?
Yeah. What was the big action for you in Priceline? I imagine everyone was just scrambling down to get up to. Everyone was just scrambling to get some downside or roll some downside in Priceline.
Yeah. In addition to managing, some of their, credit spreads that they put on, those were the people who weren't that happy. There were some people who were long some strangles. Some of them were okay, some of them not okay. But yeah, just, a little bit of everything really kind of kept us busy.
Speaking of Priceline, you probably should let our listeners know what was going on out there. They did indeed miss their earnings, and they were down about 5% to the downside today, down nearly 40 handles to 681. Of course, this kind of volatility, not exactly unheard of in Priceline. This one has been whipsawing around for quite a while of late. Of course, they usually, or at least going into earnings, averaged about 45,000 contracts a day, which was a pretty steep clip for them. They put up over 100,000 today, so serious volume going up in good old Priceline. Of course, none of that can match the volume printing machine that was Cisco today with 800,000 contracts. Everyone and their mother loves Cisco apparently today. But we will get into that shortly. Yet another tease for the old odd block. Tim, I have an interesting one for you, actually. I mentioned earlier in the intro that I was over at the CME this morning recording our long and short of futures options program that we do with them every month. And that's obviously aimed at futures options traders and talks about some of the new developments in that space and some of the new tech, some of the new tools that are coming down the pike from the CME. And they're very gung-ho over there these days at the CME about ETF options. I found that relatively surprising given the fact that those products have been traditionally viewed as the enemy over there for quite a long time. They've been eating into their market share and stealing a lot of futures options business. But they're really planning not so much new products, but some interesting new tools over at the CME to really start digging into some of these ETF options that hold a substantial portion of futures in their makeup. And so that allows you to assume a certain level of correlation between the vols. And so if you have an ETF out there, let's say maybe USO, that is 70+% with futures in its or let's say as about 70+% of futures in its makeup and futures options, then you can do a lot of arb between the implied vols of those two products. So they're starting to work out some interesting new products to actually go out and identify arb opportunities for their clients between various ETFs and futures options, with, of course, the goal being that these two products shouldn't really be competitive, but actually should feed itself. If you have a lot of volume going up in GLD, it should hedge with the futures and vice versa. Ironically, GLD and SLV, because I mentioned those are two of the ones that aren't as suited to this type of approach because they hold so much physical in those ETFs. So they aren't as well suited to a vol arb type of analysis. Whereas ones that hold a lot of the futures, those actually are much better suited to this type of analysis. I'm curious if you heard anything about this, Tim. I know you guys have been pushing oil particularly pretty heavily over there at OX lately. Have you heard anything about these new developments coming out of the CME?
No, not at all. That's sounds very interesting, and possibly create a lot of opportunities.
Yeah,
but
so they're actually going to create tools that you can search for vol arbs on.
That seems to be the gist of what they were saying. They're going to create more tools to identify more trading scenarios and opportunities in these products because to their way of thinking, it makes a lot of sense to identify relationships and causalities between the ETF and the ETF option and the futures options, because that just leads to more back and forth trading between those two products. So they're instead of trying to directly compete and steal share, they're actually trying to work out ways that they can trade symbiotically between the two products. So I thought that was kind of interesting. You don't hear, and that's just kind of goes to show, I think, with the trend we've been seeing from a lot of exchanges these days lately. Certainly we saw this down at OIC last week, that so many of these exchanges are becoming de facto tech vendors in and of themselves. Yeah. They're offering, I mean, for example, last week at OIC, we saw a lot of exchanges announcing not just market data feeds, but you can call them, I suppose, souped up market data feeds that come with Greeks. They come with implied vols. So they're pushing all of this data down the pipe to you, which really means you don't need much of a processor at all on your end to really run a lot of things that used to take a lot of processing power. Now the CME is going to be identifying vol arb opportunities for customers and clients. There's a lot of interesting technology developments going on in the exchange space right now, particularly as these exchanges are realizing that transaction fees and everything else are becoming a race to zero. They need to have alternative revenue sources, and tech certainly seems to be the place that they all are turning. So anyway, I thought that was interesting having that chat with them today. That program will go out probably next week on the Options Insider Radio Network, so stay tuned for that, my chat with Scott Warren over there at the CME regarding that new development on the technology side, as well as a lot of other interesting developments on their index options suite over there at CME. Speaking of vol and vol futures, I'm not sure if you guys saw, we had a story up on the Options Insider today. If you're interested, by all means, serve on over to theoptionsinsider.com. You can find it right there. The headline is CBOE considering Apple volatility product, and what the gist of it is they're rattling that saber even more over the CBOE these days about listing a VIX future on Apple, which is something that a lot of us have been expecting for quite a while, but it might be interesting to finally see this listed. I'm surprised it's taken as long as it has, given the just outpouring of love for all things Apple. I mean, if you can think of a perfect storm product that combines the two things everyone and their mother loves these days in the options world, it would involve Apple and VIX in some sort of strange hodgepodge, and that's exactly what they're doing here. So it might be an interesting one. Andrew, Mr. T-Nav, or Uncle Mike, do you have any interest at all in a Apple VIX future, and of course down the road Apple VIX options?
I'd definitely look at it for sure. I think it's just a ploy by all the people at the CBOE to make it so I really never go to the bathroom. I think they all listen to this show.
That's a big conspiracy to bump up the BMI.
They're after me. They want me to bust a kidney or something.
The old BBI.
No more bathroom breaks for you ever.
No, but it is an interesting. Oh, go ahead, Andrew.
TJX Apple out. They kind of threw the. They shot something over the bow with this VIX Apple index, and it's actually kind of it's a nice little, it's a simple way for all you vol traders out there when you see it start to break, because Apple tends to that volatility tends to trend pretty good intraday. Like all the people come in and buy it, and then all the people come in and sell it. So it makes a nice little. I find it a nice little. Addition when you're looking at Apple. It's a lazy man's way to see what's going on with the implied volatility in there. So would they trade? Hey, it's got Apple on it. Of course they'll trade. And it might. I wonder how convenient it would be of like a buy right mechanism if you bought Apple and you bought the vol futures. I guess that could be a hedge against this comment. So when you think about it, vol gets super cheap, you buy the future.
Yeah, definitely. I can imagine a lot of our listeners diving into something like that, just given, like I said, the love for all things Apple and all things VIX. I can imagine the two of them will be just chocolate and peanut butter. It will be irresistible for our audience out there. Of course, you're right. They have been talking about this Apple VIX for a while, but nothing has been tradable of yet, and certainly nothing is. They kind of just hinted at it at a conference today, a UBS, I believe, conference, that they will be launching that product sometime down the road. So it'll be very interesting to see how some of these trades line up, like Apple downside puts versus VIX verticals and VIX call verticals and things like that. And a lot of talking about arbitrage opportunities. There'll be a lot of fun vol back and forth between and trading back and forth between those products. So Uncle Mike, you don't have to worry about it anymore. You just buy VIX upside in Apple, and then all your hedging is done.
That's it.
All right, and then moving on to some other interesting topics here in earnings. Just well, Cisco was the big news. We'll get to that in a moment. A few other names announced the other day. Activision is a name we talked about on the show quite a bit. It's one we've been trading very actively. I have, at least at Options Insider, for quite a long time. It's been in this 11 to 13 range for so long that it's just been back and forth, 11 to 13, 11 to 13. So bullish risk reversals, strangles, all on that 11-13 strike. All seem to be very all are favorites of mine, and all appear to have worked out again post earnings here, with the coming out with modest, nothing super exciting earnings. Probably a little better here than we saw with their counterpart EA. Were certainly didn't excite the street the other day when they announced, but still those good old 11-13 strangles seem to have worked out yet again post earnings. Andrew, I know you're deep into the video game ones with THQ and everything else. Do you trade Activision at all?
You know, you mentioned Activision. I just haven't. I didn't make markets. I don't even remember anymore. I know Electronic Arts for a while, I like Take-Two. That the vol gets cheap in that name. So, I'm not going to say I just don't. I know you like this one, so I probably should pay attention to it, because you get the little risk reversal thing going on there. Usually pretty good thing.
Yeah, I'm a fan of risk reversals. I'm a fan of this one being so range bound. It's just a great little name day. We always just keep going back to the well over and over on this one, and it has been for years. It's
nice when they don't move very far.
Exactly. I'm surprised, though, in your litany of products, how you've never come across this one. I'm assuming, unless it's crazy pink sheets, you've traded it in some way, shape, or form.
It's weird. It's just Activision is just I'm not going to say it. I did it was a CBOE trader. It just wasn't that big back then.
Yeah, it still isn't that big. You have to work your stuff to really get in and out of anything on any appreciable day. It did 22,000 contracts today, which is a heavy day, but that's post-earnings volume. Obviously, they've been averaging sub-5 going into earnings, so it's usually not that big of a mover, but still an interesting one that we like to remind our listeners of every now and then, because it's a fun one. And before we close out the trading block here, anything else that caught your guys' eyes or was getting your attention on the old trading screens today?
I find the markets, I think we are in a weak period for a while. I think that whatever we didn't have, the Greeks put the nail in the coffin, of course, if they can put a government together and actually get the Europeans to pay their bills. I thought that was very interesting when the Germans said, well, we're not going to send you your cash if you don't get a government together. And then all of a sudden, one of the parties splintered off and it might happen. I found that they are the ultimate tough love country. You have to beat them with the stick or they won't do it. I'm calling it the Ouzo Revolution. They're trying to throw the Ouzo Revolution.
All right, and with that lovely.
Real quick.
Go ahead, Tim.
The grains were pretty active today on the USDA report from this morning. It was pretty bearish corn and bullish beans. So, corn was down over 3%. Beans were up over 1.5%. I just saw cotton. Wow. That one was almost down 5%. It's a big move there.
Are you still bailing on bail?
Bailing on bail. Yeah, I haven't looked at bail in a long time. But let's see what's going on there. Yeah, that does not look pretty. I would be bailing on bail.
Bail, the ETF of choice for all those cotton traders out there. And you know who you are, all 6 of you in our audience out there. But yeah, it's interesting you mentioned the ags, because I was talking about those over the CME today, and just kind of how they were the hot thing for most of last year. And even a lot of professionals, market makers, moved their operations out there. It got so bad out there that a lot of market makers are starting to complain that it was just local to local paper, because there was so many new locals out there in corn land, and now a lot of them are moving back to equity land like Apple and a few other big names that are still active from a day trading perspective. But yeah, the ags have certainly seen their roller coaster over the past year, particularly corn and wheat. But ones we'll have to dive into more perhaps on some future episodes. Thank you for that, Mr. T-Nav. And that is going to do it for the old trading block. And now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and that funky tune means it's time for the old odd block, where we piece together some of the interesting activity that's been lighting up the old options tape today. And as I alluded to in the trading block, we're going to start off with Cisco. And as I said, this one was just a beast today. They've been averaging a pretty hefty clip of 100,000 contracts of late going into earnings, so that's pretty sizable for them. But today they blew the doors off that, doing 800,000 contracts. I'll have to check, but that might be the most active day I've ever seen in Cisco. It's certainly up there if it's not the top, because that's just a beast of a day for Cisco. As we also said, they were down about 2 handles today at the end of the day, or a little over 10% to 1681. And it's funny, I've been keeping in my back pocket, I've been rolling some long 18 puts for a while, for a few months, and I finally let them go last expiration. I said, you know what, I'm just clinging to this Cisco downside for no reason. And sure enough, I hold it through. I let it go prior to the earnings that they finally break south of that 18 handle again. So, c'est la vie. Bad timing on my part for that one. But I've been keeping in my back, I think mostly just for you, Uncle Mike, hoping that Cisco would turn to the dark side again, so we could all revel in their pain.
Yes.
But yeah, I didn't have them on this one, so no this earning, so no celebrating on my end. But still interesting enough. And what's even more interesting is that certainly it's hard to find trends when you have 800,000 contracts going up. That's just a slew of paper. So there's a lot of things going up, certainly. But one of the interesting trades that did catch our eye, and certainly one of the more sizable trades going up today, particularly given an average day is only 100,000 contracts out there in Cisco, we saw all of that going up today in one size bullish risk reversal. We talked about the risk reversals in ATVI before. This one was far more substantial. Someone came in and sold 51,000 of the OX16 puts for 77 cents. And then turned around and picked up the same number, so a total of 102,000 contracts of the OC19 calls for 54 cents, netting out to 23 cent credit on this trade. So given the just explosion of bearish paper we saw lighten up the tape in Cisco today, it was interesting to see that one of the more, if not the largest trades that went up in Cisco today was actually a bullish risk reversal, someone taking the opportunity to put on some sizable bullish exposure in Cisco for a comparably cheap price and at levels that aren't too bad. Uncle Mike, I know you've kind of washed your hands of Cisco right now, but what do you feel about a 16-19 risk reversal at these levels here?
You know, it's tough in that I hate the stock now, but I have an emotional attachment to it, and my rule as a trader is I stay away from stuff with which I have an emotional attachment to. So, you know, the 16-19 risk reversal, it's one of those things, if you have a sentiment on it and you want to protect it, that's the beauty of a risk reversal. So if I were to do something on Cisco, it would be along those lines.
You and I, this seems like an interesting trade here, but also you and I have fond memories of Cisco hovering at 15 and south for a while. So this guy could be in a world of hurt if that trade continues. Cisco, one of those, we joke about Netflix being the widowmaker, but Cisco certainly is perhaps a more long-term heartbreaker. You flirt with Netflix, but you try to marry a Cisco, and sometimes it just breaks your heart, and it leaves you broken and penniless and crying by the side of the road. I'm painting a very, very grim picture of Uncle Mike here while he's gone.
That is why we sell put spreads and we don't just sell puts.
Who sells naked puts? That's just silliness.
That way you can go away. You can put it down. You can put the stock away. It did not work for me. I'm going to make it go away now.
Yeah, when you're scrambling to dump Cisco in the 15 handle range, that is just not a good net trade.
No, that's definitely rough. No question about it. It's 13.75, the low of the year for that pig dog.
Yeah, so
what's amazing is how much money do they've got to earn before somebody cares? That's what I find it. I find it really. Are they going to trade for cash eventually? I mean, what is it? They've got $9 in cash. The stock is $17. Like, they're never going to make any money ever again. I mean, hey, people can hate stuff for a long time. I just have to look at how bad their earnings are. What's funny is you could probably sell the May 20 calls in Cisco, and you'll probably make money. 20 cents out of the money, and they'll probably go out worthless. 27 volatility. What a piece of junk that stock is. So I agree. Sorry, it was just side commentary.
Yeah, if you can get a bid on those 20s, they're at a penny right now. But
well,
maybe prior to earnings, you had your chance.
Yeah, next May. It was funny as I looked at the June. I think it was like the June. 18? It was around $19. Like the 18-19 strangle in June was like $1.45. Last. And I would have done okay. You would have done okay on that, I think. Yeah, no, it's funny. June 18-19 straddle, stock down $2, and you would have broken even, I think.
Yeah, I would say it's right about there right now. Yeah, it's about $1.40 or so.
Yeah, you'd be thrilled, right? You get to buy a bunch of stock against your straddle, and you have a bunch of 18 calls for nothing. Great, totally worthless.
That's why we trade
right.
Delta Neutral.
This stock is a piece of junk.
Yeah, it's a piece of garbage.
No way to make money in it.
Ever since they just dumped Flip for no apparent value on that IP whatsoever, I think a lot of people have just been scratching their heads as to what the hell is going on with Cisco.
Yeah, they are a company in confusion, it feels like.
A fun one to talk about. Now we can put them back on the shelf until next earnings, when we can bring them up again to torment Uncle Mike yet again with Cisco earnings. But now we're going to move on to another name that has been on the odd block in the past. This is TJX Companies, owners of some of your favorite retailers. I know Uncle Mike loves shopping at his TJ Maxx. That's when he's not at the Dollar General, he's off at TJ Maxx when he wants the high-end clothes.
Love those commercials with the little jingle they have on them.
I can't remember that jingle. You know, I remember, I'm not sure if you guys had this out here, but when I was a kid, I used to love going to TJ Maxx with my mom because they used to have things like slides and stuff, and it was a great little store for kids. Like when my mom was shopping for clothes or for us or whatever, there was running around climbing ladders and sliding down slides. I don't think they really do that anymore, but it was a fun little niche they had all to themselves back in the day. They operate a bunch of different fun lines. They also do TJX Canada and a few TJ Maxx, and of course Marshalls, the other Tusaw household favorite. TJ Maxx had.
My kids like the toys. They've got the junky cheapy toys at TJ Maxx.
There we go. When talking toys, it's always about the cheap toys because they last about a week anyway.
You can have $5, but there's no toy that costs $5, so we know there's nothing they can get. It's a very, very cruel hoax we play on our children. There's no
that's
toy, and yet try and they try. Well, it's like we don't want them buying any toys, so here you go. Here's $5. Go find a toy. There are no toys.
They come back with a Snickers bar.
They'll be telling
Unless
that
it's really junky, and it's so junky, even they can't say, you know what, we can't get that. It's just way too junky.
They'll be telling that story to their therapist many years from now, Andrew. So whatever you're saving in toys now, you'll be losing in therapist bills many, many years from now, sir. So keep that in mind. Play the long game, sir. All right. Speaking of the long game, TJX, we saw a sizable short put spread going up in this one. Of course, TJX closed at $41.79. Up about 52 cents on the day. This is the name that does about 3,000 to 4,000 contracts a day. They did nearly 22,000 today. The bulk of that, pretty much all of that, went up in one massive June 35.40 put spread was sold 10,164 times. So nice round number there for a net credit of 61 cents. Obviously selling the 40s, buying the old 35s. And an interesting one, earnings for TJX are actually coming out here in May, so this is not a direct earnings play. This is more of a opening play out here in June, where the two strikes where they picked have an open interest respectively of 343 and 25. So a lot of opening paper here in TJX. Now, Andrew, I know your better half there in the pit loves ladies retail. Do you follow it as avidly as Mr. Sebastian does, and do you like this downside put spread here?
I think the downside put spread is, I like it. I'd say it's pretty aggressive for the schmarminess of the market we have right now. But I believe Lauren does like TJ Maxx. So Lauren Sebastian. So that's probably, because I think they have good purses. Believe me, I've heard this when I go over there and I get all the details. So I think so. Don't quote me for sure on that. I don't think it's a bad way to get long. I think probably 3 months from now, we'll all be looking at this level in the market and some of these stocks and wishing that we were more aggressive, buying stuff or selling some put spreads or stuff. But for right now, I think it's a gutsy sale. Let's just put it that way.
Yeah, looking at this chart here on TJX, it's been pretty much off to the races over the past 2 years. It's been nothing but pretty much straight up since May of 2010 roughly. So this guy is coming in pretty much at the top. It was trading south of 20 a few years ago, and now it's hovering over the 40 handle. So this guy is coming in and putting a line in the sand, particularly given the volume numbers we've seen of late in TJX, and saying south of 40 and no farther for me here in TJX. It's kind of like
like I said, it's aggressive. I mean, it's been on it, but all these dollar stores and stuff like this, they print money, and as long as your unemployment's 8.2%, they're going to probably keep printing money. That the TJ Maxxes and the coaches and everything else in between is probably not doing so great.
Let's dive on over to our last name on the old odd block. It's CBS. And, of course, a lot of their programming not exactly fit for human consumption these days either, but I'll leave that to the TV critics among us to judge. We're just looking at the old options activity. And you'll recall, keen-eared listeners, that we discussed this one back in the odd block back on April 19th. We saw a burst of heavy call buying here in CBS. We saw a lot of people coming in, piling into the May 34s. About 4,400 of those were picked up against open interest of south of 1,000. The bulk of those bought for about 70 cents. It seemed like an aggressive buy at the time. The stock was hovering in the low 30s, and it had to gap up pretty substantially to make that. Going into earnings, looks like earnings, it actually did work out for this name. If you looked at CBS and how they performed, they actually got as high as about 35 even, right in the May 2nd post-earnings fury that was going on in CBS. So these calls got bid up all the way up to about $1.45. So if you were holding these calls going through earnings and you took the opportunity to get rid of them at the right time, you could have doubled your money fairly easily. Of course, as we've said many times on this show before, the opportunity, the window of opportunity to sell out your long premium post-earnings is usually quite short, because that balloon is deflating and all the vol is moving against you. And that certainly is what happened here in CBS, where if this holder did not dump these calls going into the post-earnings, and looks like there's about 5,400 still open on this strike, so I'd have to go out on a limb and say he did not close out that 4,400 lot, then it looks like, he missed his chance, because the vol came in aggressively, the stock came in aggressively after earnings. Is trading around 33 even right now, and these calls are now 20 bid at a quarter. So another we hit on the show quite a bit that you need to strike while the iron is hot, particularly if you're trying to make money being a long premium trader going into earnings. And this is a good example where this guy had an opportunity. Maybe he was holding on for something better. Whatever the case may be, looks like these May 34s still open post earnings, and not exactly looking too healthy right now. So that's it for the old odd block today. We're going to end it with that little review of activity from the 19th. And now we're going to dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is the portion of the show where the boys at OX, namely Mr. T-Nov, today hold court, and I get to rest my tired vocal cords. So, Mr. T-Nov, what trading mantra, what pearl of wisdom do you have in store for our listeners today?
Well, it's something I see all the time, something I bring up on the show, something I like to talk about. I enjoy coming to work. I enjoy what I do. I like to talk to people who are making a lot of money. I don't like to talk to people who are losing a lot of money. And, again, it always comes down to, if you fail to prepare to fail. And kind of where I'm going with this one today is essentially futures and the importance of last trading day. I talked to a couple people this morning who were in some of the grains. Now, they were still trading in the May contract. Now, I mean, that contract, the last day to trade that is coming up shortly here within the next few days, if not Monday. We ask for people, traders, to be out, a few days prior to first notice day if you own, and if you're short, again, a few days prior to last trading day, not necessarily the day before or even 2 days before. And the whole reason is, when people call us and they ask kind of why, it's really because, volume and liquidity just disappear. So, this morning, essentially, there was someone who was, short some soybeans. And, of course, it was the mini contract, but, he had a couple of them on. He wasn't making any money. He was losing money. And those are the ones that usually try to stay in for as long as they can because they think they're going to just get it back. And I haven't really seen it work out. So, here we have the USDA report. They're calling for beans a lot higher. And this guy, needs to be out fast. So it's just very important that, if you're trading a dated contract, futures, options, you have a plan that you're prepared, for when you need to be out of that contract, why you need to be out. It's just, again, I see it a lot. The individuals who are successful, they always have a plan. They're always prepared. They kind of listen to us when we say, here's the reasons why you need to be out of this. And it's the people that, again, they won't listen to us. They're trying to claw back a loser. And those are the ones that it just never works. I mean, it always gets worse. So, again, I just, like I said, fail to prepare and prepare to fail.
It's interesting, particularly when you're talking about futures options, because the window of opportunity there is so limited. With the futures and the underlying gapping up limit or down limit, then you're essentially done for the day. Your move has occurred, and you're left to kind of stroke your chin in the options and try to figure out what to do from that point on. So you're right. If you haven't prepared and planned prior to that moment, then you're certainly not going to do very well post-limit up or post-limit down or whatever we've been seeing out in the ags these days. I know corn has been a big friend to the limits of late. So if you're trading those products and you're not prepared for those scenarios, then you're right. You probably should not be trading those. Go back to the nice, happy mutual fund. Just buy it and hold, and you'll be a happy camper, and you can sleep at night.
Yeah.
All right.
Like 2008?
Yeah, well, there are scenarios. Hey, money markets, those are safe, right? You can't touch cash, right? Nothing ever happened in those.
Putting money in a safe and sitting in front of it 24/7 with a .270 rifle.
There you go. See, I knew there was a secret sauce at the heart of the KYO strategy, and now I know what it is. You guys take turns with the shotgun every night?
No, it's a rifle, .270 rifle.
But you want a shotgun in case the rampaging hordes come in. You don't want to take your time aiming. You just want to point and pull.
Long range. If we see anyone even near us within a mile, that's when we shoot first. We ask questions later.
You're not waiting until they get inside.
We don't believe in short range. It's long range.
Quarter mile plus.
That's how we protect our client assets at Know Your Options.
I like it. Literal protection from the boys over at KYO. All right. With that lovely image in mind, we shall dive right into the strategy block.
The strategy block.
All right. That regal music usually means that it's time for Uncle Mike to come down off the mountains and dispense some wisdom for us today. But he's a wee bit tired after all those BBIs today, and so we're going to hand off the strategy block baton to the Lobster himself, where he's going to discuss the fun that is, if you're going to buy options before earnings, you might want to consider perhaps a spread or two. Andrew, is that the gist of your conversation, sir?
Yeah, there's two things on earnings everybody should realize. One is implied volatility goes down after earnings always. I don't even think I've seen an exception to that rule, except in maybe the case of Netflix after earnings when it went from
those crazy scenarios where they cut in half
150 to 150. Okay, that will be the exception. Okay, other than that, for the most part, you can bank on implied volatility go down, crushing the value out of your options. So if you are prone to speculate by buying either call spread or put spread, or using some kind of iron butterfly, right, to limit all these things, one, you can either bet on the volatility coming in, right, and actually our customers in Priceline that did the best today basically traded the iron fly and closed it on the opening from yesterday, and they put a pretty wide band on it because they know full well they're expecting about a 25 to 30 point move. When it didn't open that far, the thing came in pretty big. So you have position wise, number one, so the thing that they both have in common, the iron fly, which you sell the straddle and you buy the strangle outside of it, and a call spread or a put spread, is they recognize volatility is going to come in to some degree, right? And they're also contract neutral, which means you don't have the short extra contract here or there. And the problem is you really never know what's going to happen in earnings. You can look at Cisco for an example, or Priceline, or any of these stocks, Apple up $50. And what's funny is the trend, it seems like they're moving almost more volatile than they used to be going through earnings. This last year has been, I think, kind of an upender for earnings. But you just at least be flat the contracts. And by buying a spread, you take the CBS example, right, where the guy bought the 34 calls. Try to buy the option where it's starting and sell the option where you think it's going to go. Just do that simple construct. You want to buy, when you trade a spread, you want to buy the option where you think it's going, and then you sell the option where you think it's going to go. If you want an iron fly, where you say, I think this volatility is going to come in, you want to sell it. You want to sell a straddle value that you believe will hold, a good percentage of the moves that you've had, and then you buy the strangle farther out. So that risk you're taking is really only if the name really presses beyond the move. And at least, no matter what, you always know what your risk is, and you have a chance, if the stock makes the move in the direction you want it to, you'll make money on the trade. There's nothing more annoying to be right on direction and not make money. You want to just kick yourself in the head. So both of those things, even though the spreads look crazy at the time, you're like, oh, why do I want to sell that option? If you get the move and it goes to the short strike, that option is going to collapse, and you are going to get at least some gamma and make the long option perform. So those are really like, for earnings are basically, I'm picking direction or I want to sell the activity, right? Those are probably two of the odds-on ways to make money, in earnings. And obviously, then lastly, the third way is buying. Probably at this point is, buying options, which are, I would say of the three buying options, you need more money, and you have to be what I would call you have to be sort of direction neutral to do it. It is just, it's way the crapshoot of just buying a call and hoping it goes up. If you don't at least spread it, it's a pretty big risk for the money. Obviously the potential return is unlimited, but you are damaged by the volatility coming in. So you've got to be mindful of what you know is going to happen after earnings, and volatility. We'll just call it 99.9% of the time out of 100 will come in after earnings. So
Yeah, we had this conversation yesterday, actually, on our other program, Options Boot Camp, with our good friend Dan Passarelli. We discussed this exact topic about buying options going into earnings, and we expressed the same sentiment there that we've expressed on this show numerous times, which is we tend to, for the most part, frown upon buying premium going into earnings and if you are going to do it, though, there are scenarios where it is perfectly understandable where you want to buy earnings. There are opportunities to buy premium going into earnings that are good trades. It's just if you are going to do it, by all means, and for the love of God, spread it off. You don't want to just come in and be that guy buying 4,400 May 34s in CBS and then watching that trade go to zero because
when the direction was right.
Exactly. Yeah, he was right. He had, I still don't know what this guy was thinking. I don't see him spreading it off anywhere else or what he was trying to do with this trade, but or what his plan was, except for CBS to go to 100 and for him to retire. But in lieu of that, it's the between 0 and 100 trades that where most of the money is made and lost. And definitely, if you're going to be trading earnings long, by all means, spread the thing off, for the love of God. If you listen to the show and take anything away from it, take that away from it. And speaking of taking away from it, we're going to close out this strategy block segment and dive into a quick around the block segment.
Around the block.
All right, and welcome to Around the Block. This is the portion of the show where we discuss what we're watching on our trading screens for the next few sessions. And I think there still is, and we still are in the teeth of earnings season here. There are some interesting names coming out. NVIDIA coming out before the bell tomorrow. So if you are planning on trading NVIDIA, hopefully you got your positions on today because you've missed your opportunity now. Well, that one closed at $12.42. We'll see what that one looks like tomorrow. Looks like they're expecting about $1 or so move on that one, looking at the ATM straddle. So we'll see if we have some activity in NVIDIA. That, of course, was a darling last year, shot up to about 20 or so, then came right back down the other side. So a lot of interesting activity of late in NVIDIA. And then, of course, I think the big one a lot of our listeners are paying attention to is Groupon coming up on the 14th. This one is from a vol level, from a price level, has been attracting a lot of interest. I know a lot of our listeners love to get into those short put spreads, short iron fly, short iron condors going into an earnings announcement like this. And Groupon is certainly drawing a lot of eyeballs given its high IV levels and, of course, that relatively low price level. So mitigating your ultimate risk in this name. So a lot of people piling into Groupon. Andrew, Uncle Mike, Tim, you guys seeing a lot of people positioning in Groupon positioning in Groupon options ahead of earnings?
Not a bit.
Not over here.
Well, there you go then. Puts the lie to what I've been saying all the time. No one gives a crap about Groupon is what I meant to say. No.
Speaking of, just to not to interrupt too much, Mark, but I guess I'm doing it anyway. But Facebook, do they have an official IPO date yet, or what's going on?
I believe it's the 18th. Yes, on expiration. Sure? Yeah.
Right. So I know I've got my Zynga play on there. I'm getting smoked.
The synthetic using the risk reversals to trade synthetic Facebook.
The problem is the Facebook news. They're having revenues going down. It's not sounding like the great IPO it was, and I'm like, all right, I'm down a couple bucks on this. Maybe I should just close it and just say I was wrong.
I think it's the hoodie, really, that's causing the problem.
Although the Ren seems to be holding up, I'll give it that, but the Zynga is not. The Zynga, and I don't know if it's really just because the market hates everything right now, which is what I feel like. They're just kind of selling everything. But they certainly don't like that Facebook much. I'm sorry, the Zynga much. It's pretty much been poking around near the lows. So
yeah, these are all pushing pretty much new lows here, and yeah, of course the vols come in post earnings, so you're not even getting a lot of a bump to trade anything out there. I was with you for part of that. I know we were talking about the legging into the bullish risk reversals for essentially very little outlay on this name as a synthetic Facebook, and I started getting into that. I got halfway. I got into the short put spread part of the equation, and I just couldn't bring myself to buy the upside. It just didn't. I didn't have that level of enthusiasm for Zynga that you clearly do, Andrew.
The thing is, the reality is, the only way this thing is going to pay off is if you see Facebook IPO at $28 and it opens at 42 in the aftermarket, something insane like that. And then people go, oh, social networkers can go up again. I'll jump in. So what I have to do is I have to wait till Zynga is just trading at the dead low, and then I'll probably add a little put spread at that point, and then I'll wait. And if it doesn't work, I'll just blow the thing out and call it a day. But
yeah, if any listeners want another example of how that volatility balloon implodes post-earnings, these May 7 puts are trading about 30 to 35 cents, with the stock nearly $1.20 higher going into earnings. The stock was trading around $9, and people couldn't gobble up enough of those at 35 cents, and now they're offered at 15 with the stock nearly $1.20 lower. So that just shows you how much that vol balloon comes in post-earnings, and if you're going to try to ride that train, you need to be extraordinarily right. In order to offset that. They have
not performed. Let's just put it that way.
Yes. If you gobbled up those 35-cent puts, you didn't do very good, particularly if you hedged them.
Everything I did is in June, so it's maybe the May actually just selling some May puts might not be a bad idea, but it's almost like I don't really think we've seen any kind of bottom in the market as far as just day to day. It's so weak. So it's like there's no rush to do anything to add to anything, any long position. I mean, why bother? Just wait till tomorrow. You can do it cheaper. So it's like, whatever. So.
There you go. That's the mantra for today. Just wait till tomorrow. You can do it cheaper. I like that.
That's what it feels like.
I love it.
Tim, anything catching your eye here around the block?
Not too much, no. Yeah, I mean, Facebook on the 18th, if that's the IPO, that's also expiration. So we're really excited about that. Some news next week. Looks like we've got, the FOMC minutes. Looks like some housing starts, building permits, leading indicators on the 17th. Not much.
Yeah, so all eyes will be on Groupon early next week, and then, of course, the mother of them all, Facebook, on expiration. I believe they're talking about a price somewhere in the 40 handle. That's what I've been hearing anyway, but, of course, none of that has been worked out in stone yet. I'm just really curious are we planning like a week after probably again for the options, Tim?
I haven't heard anything yet, but, yeah, I mean, probably very similar to everything else, Groupon, and, probably a week.
So all of you,
I'm not sure.
Yeah, all of you waiting out there to gobble some puts.
It depends on the hoodie, really. I think, we got to wait to find out what the hoodie does, and then,
If it's a black hoodie, then those puts are going to be a bit out of control. If it's maybe a white or a more subdued color hoodie, then they might be a little bit more in line. Is that what you're saying?
Alert.
Yes.
All right, that's going to do it for the old Around the Block segment. That's also going to do it for this episode of the Option Block. I want to thank my cohorts, my partners in crime, for joining me on the old All-Star panel today. And starting off with you, Uncle Mike Tusaw, what is coming up in the land of KYO that may intrigue our listening audience?
Continue to subscribe to our newsletter, folks. In the Know. We've had a lot of people on it, and just head to our website at knowyouroptionsinc.com. It's a free newsletter. We'd love to have you so you can see what's happening from a weekly basis.
That's our man George's newsletter, right?
It is.
He's quite the font of knowledge, that one, particularly in the equity underlying and technical analysis arena. So if you're intrigued by any of that, then by all means, check out the KYO newsletter. And the next time you're off in scenic St. Charles, Illinois, stop by Uncle Mike while he's guarding the safe and say hi. He appreciates that.
Just don't get too close.
Yeah, to stay within a quarter-mile radius, and outside of that, and you should be fine. All right, and next up here in the old Around the Block, or should I say closing block, we have Mr. Lobster, a.k.a. Andrew from Option Pit. And what is coming up in the land of the pit? I believe we are closing in on the Option Pit June extravaganza, are we not?
Yes, we are. The 14th and 15th, I believe. Gigantic extravaganza. We will be mock trading, getting our customers, teaching them how like market makers or liquidity providers think. So that gives them some insight into, putting trades on that they want to do, kind of getting in and out of things, trying to give them the feel of what's going on. Even though it's all electronic, it still does trade a lot alike, even though it just kind of moves in kind of big clumps. But the second thing is the 16th of May, we have Mark and I will be doing how to be short premium with the weeklies and live to tell about it. That will be our webinar, go to optionpit.com and sign up.
So I'm assuming you will not be discussing Netflix in that webinar because you want people to survive and come out the other side intact.
Exactly. You know, that's what. And spreads. Think spreads.
Yes.
Think spreads.
Spreads. And last, but certainly not least, here on the old All-Star panel, we have Big Tim Navabi. And now that he's found his beret and he's ready to go, Mr. T-Nav, what is coming up in the land of OX that may interest our listening audience?
We do have a workshop. We have a workshop in San Diego. We have Jim Ruzan. He's in education at Options Express. He'll be there wearing a hoodie, and it's May 12th, and that's from 8 a.m. to 3:30 p.m. in San Diego. It's a free workshop.
All right, so listeners out there, if you're sick of the beautiful weather in San Diego and want to be inside for a few hours, by all means, check out the OX webinar. Jim Ruzan will walk you through all sorts of fun and interesting topics from the world of options. So if you're done surfing for the day, check out some options. It might be kind of interesting. All right. And of course, if you like this program, want to check out any more of the programs on the old Options Insider Radio Network, or check out any of the content we discuss on the show today, or any of the breaking news or analysis or education that we have, then by all means, surf on over to theoptionsinsider.com. You can find all of the programs on the ever-expanding Options Insider Radio Network there, as well as a slew of content. And as I mentioned earlier in the show, a bevy of upcoming content from the Options Industry Conference. So if you couldn't make it down to New Orleans, don't worry, we have you covered, although we won't provide any of the tasty beignets and chicory coffee. But we want to thank all of you out there for downloading and streaming and subscribing to the Option Block and making it such a success. And we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.